Okay, good morning, guys. Thank you for joining me if you have. Today is Friday, the 5th of May 2023, and as you can see here, the market is open. If we look below here, you'll see that it is all in red, just the way the numbers happen to land. If you go back a week, a month, 3 months, 6 months, or a year, each of those appears to land on a slightly lower point on the roller coaster that we've been looking at for the past year and a quarter, I suppose, almost now. So the current live result is for the portfolio is we're down £140, and that represents 2% of the portfolio value. Let's just have a quick look at notifications. So we've got some biggest stocks before earnings. Just whenever I see Coinbase there, have you spoken to anybody recently who had gotten into crypto investing 2 or 3 years ago? Have you spoken to them these days? Are they still advocating it? What do they say about it? Anybody that I know that had genuinely gone in on it has either attempted to reduce their exposure or get out of it altogether. When I hear people advocating cryptocurrency, quite frankly, to me, the way it comes across is that a lot of them don't understand what they're talking about. And quite frankly, I'm going to put my hand up and say I don't understand it either. Perhaps the difference is that I know that I don't understand it. Because the thing with crypto is nobody can explain why it must go up in value. Okay? Now I know with the likes of Bitcoin and this notion of Bitcoin mining that there's a sort of a ever decreasing amount of Bitcoin remaining to be able to be mined because of how it's structured. I don't know how I could explain it sort of better than that, but basically it's a resource, if you like, which is diminishing in the amount available all the time. So hypothetically that should push the price up. But that's the only, it's only that kind of structure that says to me that the price should increase. The issue that I see with the crypto is that it has no intrinsic underlying value. In other words, it isn't gold, it's not a tangible physical asset that you can melt down and turn into a ring and sell to somebody, because it is made of this metal that we regard as precious. Bitcoin doesn't have that, neither does any of the other crypto, as far as I know. And for that reason, I just have never been able to view Bitcoin as an investment. Now, quick caveat, that perhaps may sound as though I am advocating gold as an investment, and I absolutely am not. Do not misinterpret me on that. I regard gold as a dead asset, quite frankly. Yes, you can hold gold. Gold can be useful as a store of value, and I suppose, hypothetically speaking, if you did have a functional crystal ball and you were able to know that that inflation was going to strike, hypothetically you could have invested heavily in gold waited for inflation to strike and devalue the money, which would have then increased the value correspondingly of your gold, and you could have then converted your gold back into currency once you felt that the inflationary period had passed. So gold is useful as a store of value. It's useful to prevent money being devalued due to inflation, but gold in and of itself does not produce anything, does not pay dividends, cannot make more of itself, whereas a company can expand, it can grow larger, they can take on more people, they can become multinational instead of national. They could go from multinational to worldwide. Look at Coca-Cola as an example and point. So I can understand, I can appreciate, I can comprehend why a company like Coca-Cola would increase in value, why it would be worth more. But I cannot say the same for crypto. The other thing to bear in mind about cryptocurrencies is the second part of that word, currency. Essentially, cryptocurrencies are traded as an instrument of foreign exchange. Currencies are traded against each other. They're not they're not traded against other stocks and so on. And to think that you could trade a cryptocurrency in the same way as you would trade stock, quite frankly, if that's what you thought, you just don't have a clue what you're talking about, because get onto any of these platforms that provide a practice account. As if you've watched this here before, this is Trading 212. They provide a practice account. They also provide, within the practice account, there is, if I'm not wrong, there's the CFD end of things, and within that you can do crypto if you want, or foreign exchange. But if you're going to talk about crypto, get onto that, have a look at that, look at different currency pairs, see how they trade, compare the relative stability that there is between the big pairs, let's say GBP versus USD, as compared to something that's maybe a lot less common, and just off the top of my head I can't think of what a good example would be, but take some tiny country that has its own currency, and pair that against some other small country elsewhere that has its own currency, and look and see how those trade, and if you may well find that there's bigger fluctuations between the smaller currencies, for a whole range of reasons that I don't pretend to understand, and for that reason I don't trade, because I cannot in good faith risk money on something like that I don't understand, and I cannot say why it must go up or it must change in value in my favour because XYZ. The reality with a market, or any kind of a market, usually is things can change, but they can change in both directions, and you never know which direction it's going to go in unless you're insider trading, which, as we know, is illegal. So, you know. Yeah, sorry, I got waylaid slightly when I saw Coinbase mentioned there. Rant over. So, Peloton, that's the thing that you can do online, but you also kind of get real exercise in your own living room, as far as I understand. Networked cycling, is that the best way to I don't know how you would explain that. Anyway, it's down 15% as weak memberships forecast raises concerns. No doubt with all this global warming that's happening, cyclists are finding that they're able to go outside and get a bit of real fresh air, real fumes, experience what a real hill looks like, and all that without getting completely soaked every time they open the front door. Lemonade is up. I didn't know there was a company called Lemonade, but there we go. They had a lower than expected loss per share. I wonder why there was a loss expected, but not to worry. FHN First Horizon down 40% is a big one after TD Bank merger collapses. Okay, so clearly there was some kind of a plan to merge that with something else, and it has fallen through, and the market doesn't appear to have liked the result. Shopify up 22% on 20% workforce layoff and better than expected Q1 results. So they've dumped a fifth of their staff, but their stock has gone up. I suppose arguably from a business perspective, if you have a smaller workforce, you may be more competitive in that you will have a lower outlay for your employees, so maybe more competitive if you're able to be more efficient. I don't know. So here's some more updates. Realty Income as a REIT, Shell, Peloton again, Etsy, Moderna. I wonder how many people have bought stuff from Etsy. I have once, and I was very happy with the product I bought. Basically, it was a patch for clothing, a printed patch. I can honestly say I'm very happy with it. But it's not a site that I hear very much about, or that I see many people selling on. So high volatility. Starbucks is down 6% after reaffirmed guidance disappoints analysts. Lloyd's is down 5% despite a 46% rise. Goodness. Okay. So yeah, we've come through. Obviously, there was May Day bank holiday, so markets would have been closed then. I think actually that's why this is Friday that I'm doing this today, because I would have been available to do it on Monday, but with the markets being closed and all that. Markets closed again on Monday in the UK due to the coronation, which is taking place tomorrow, but Monday's going to be a bank holiday. And that's our last purchases there. Okay, so let's get on ahead and waste no further time. We will invest the usual £120 that I put in every week in the Vanguard S&P 500 exchange traded fund seen here on Trading 212. We're going to be buying 1.96 almost shares at that current price, and that looks as if it has gone through. The price down here 6699, or value, sorry, 6699, hasn't updated over here. Okay, and just to talk about what we see at the current time, as you can see in the past couple of days, there's been a more of a red candle than a blue one. The current share price 61.28, and our average price is 62.58. So there's a little bit of a gap there, nothing too significant. I suppose bearing in mind that what we're looking at now over the next few days is a weekend on Saturday and Sunday. Obviously that's normal, but some investors do dump stock in advance of the weekend, and then the bank holiday in the UK on Monday as well, so that just adds a further period of uncertainty, I suppose, for investors who are short-term investors, who maybe do not want to get caught holding stock outside of trading times, and from that point of view, I certainly wouldn't have been surprised to see a downturn at the end of the day today. In fact, that candle represents the past couple of days, really more so than today, because today there's been virtually no change, as you can see there. So yeah, it'll be interesting to see what happens later on Monday. So whenever I say later on Monday, I'm thinking on the fact that the US markets are open from 2:30, if I'm not mistaken, UK time on Monday. We'll not see this move, this particular one. However, if we were to look at not the 2 times, because the 2 times is traded, well actually yeah, you would see it. It is Deutsche Börse, so that's the German stock exchange. This one is the same, I think, is it? Oh no, sorry, that one's London. Okay. But yeah, there are other, let me just do it this way. If we were to look for the S&P, we will be able to find it in dollars. Although saying that, I don't think there's any of the American. I don't think we can trade it through this on any of the American ones. No. Sorry, I've done that wrong. I should have sorted by exchange. And that way we get them alphabetically. Right, so let's see what's at the bottom. Okay, so the bottom ones here are the Swiss one, and if we were to go up to the top, what are we going to be looking at? The Deutsche Börse or something? Oh, the Italian one. Okay. I think there's been a couple more exchanges added since I had begun using this. There's no harm to kind of showcase this, I suppose. So as you can see here, there's the Borsa Italiana, Deutsche Börse, obviously German, and then Euronext appears to be Dutch, except if you're in Paris. and we've got the London Stock Exchange as well shown there. There are many other exchanges available. As you can see, if you just don't put in a term, you will see all the various instruments, and the Nasdaq and all the rest will appear there. So guys, that is pretty much it for today. Just to record the fact that the portfolio value as things stand, 6,700. Free funds 43,160, and we're currently sitting down about £140 on our investment as a whole, and we are looking forward to the recovery. I don't know if there's any good basis to suggest or expect that the longer things drag, the greater the recovery should be. I'm not sure that that there's any correlation in that sense. There may well not be, but who knows? It's a nice idea. Guys, with that, I would like to thank you for watching today. I wish you a good end to your day, and if you enjoy the content, please give it a like. Feel free to subscribe, and I'll be back again next week with more investing.